Welcome to today's GNCC Espresso webinar, all about succession planning and how to invest in a business venture. The benefit of succession planning is to make sure a company always has the right leaders in place should a change happen and be desired to happen, and to provide a pathway for future stability and ease the transition of next generation leaders. And when it comes to investing in a business, one might think that this is not for you. But consider many of us are already investing in stocks, bonds, mutual funds, real estate, and more. Investing of any type might give people a sense of security in case of an emergency and an opportunity for growth when chosen wisely. My name is Mishka Balsom, and I will be your moderator for the next hour. Today's Espresso webinar is powered by Meridian Credit Union, Ontario's largest and Canada's second largest credit union, helping to grow the lives of more than 370,000 members. And with us today is Rob Caruzzi. And Rob, I'm going to pass it over to you.
Thank you, Mishka. Hi, everyone. Welcome to today's Espresso seminar. Very happy to be able to join this seminar and be able to be part of this group. So I'm the Regional Vice President of Wealth for the Niagara region under Meridian Wealth Management. And, we're really happy to bring Doug Carroll back. He was on last month's Espresso seminar. And Doug's going to present today, again, on business succession planning and business investment. At Meridian Wealth Management, we work closely with our members, and we often work with Doug Carroll very closely to be able to provide different strategies to our members on business investment and succession planning. We take a very purposeful approach to these two activities and initiatives with our members and try to embed them in their long-term financial plans, and then work closely with our members to make sure they come alive. I'm going to pass it back over to Mishka, but if you have any questions after the call, we welcome you to reach out to us. Please let us know what questions you have. Reach out to me directly and we can go over your questions, and always look forward to setting up some time to have you meet with one of our financial planners. Mishka, back over to you.
Rob, thank you so very much for being with us today. And to all the attendees, we'll make sure to share actually Rob's email address in the chat function as well. And thank you so very much for bringing us actually all together here today, and as well also of having Doug Carroll on our panel. And on that note, it is my great privilege to actually introduce to you our two panelists. As mentioned, and as you had heard from Rob, we have Doug Carroll, who is a tax and estate specialist with Aviso Wealth, a wealth management partner to Meridian Credit Union. Aviso is a nationally integrated financial services company serving the wealth management needs of virtually all of Canada's credit unions, as well as a range of independent financial organizations. Doug has held roles in the life insurance and investments industry at both the supplier and distributor level. And combined with his hands-on experience of running an estate planning law practice, he's able to offer practical insight in personal wealth matters. He's also a trust and estate practitioner and a certified financial planner, and previously sat on the board of directors of the Financial Planning Standards Council. But to many of us, he's also a household name because he has extensive media mentions and is in all of our national media covered on a regular basis. So Doug, thank you for being with us.
Thank you, Mishka.
And it's also my honor to introduce to you Dan Bordenave. He's the CEO with the Spark Innovation Educational Center. Dan graduated with his Bachelor of Kinesiology and Masters of Science from Brock University. While in school, he was working as a registered kinesiologist in long-term care homes and saw a need for older adults to have more support when walking. This motivated Dan to invent the world's first device that attaches a person's wheelchair to a walker. This multiple award-winning device is called the ARM device. From there, Dan began to mentor other young entrepreneurs on how he managed to be a self-taught entrepreneur and a business professional. From these opportunities, he was able to work with Spark as a manager of member relations and help to relate to budding entrepreneurs. From that point, Dan was elected to be the CEO of the organization and continues to support entrepreneurs along their journey by providing an all-encompassing space with essential resources such as technology, mentorship, curriculum, and funding opportunities. Dan, really glad you're also able to join us.
Thank you so much, Mishka. Really happy to be here.
Thank you. And today's format for everyone who is with us is, as always, a very interactive one. Many of you have provided us with some of the questions for the Q&A portion of our webinar, and we are committed to getting to all of them. As the first part of it, we're going to pass it over to Doug for about a 10-15-minute presentation focused specifically on succession planning, and then we're going to get to both topics after that. For those of you who wish to enable live transcript, please refer to the bottom of your Zoom screen for that option. And as those of you who are and have been with us on many of our Espresso webinars, this webinar is being recorded and will be shared with you following this hour. So on that note, let me pass it over to Doug for about 10-15 minutes, and then we will start the Q&A session after that. Doug, over to you.
Okay, Mishka, and I do promise, I'm looking at my clock, which is right below here. I'll take about 10 minutes here just to outline the topic, or my component of the topic here. And as I'm going into this, I do want to just add on one other thing in terms of my background. My earliest education was doing my undergrad in business generally, but also specifically in entrepreneurship is what I spent a lot of my courses on. And I worked with an organization that promotes entrepreneurship in the education system and with young adults. And this view that I have on succession really does originate from those early days of working in that way. So I want to just lay out some groundwork here. I do talk on this topic from time to time on succession specifically. And I have a run of a PowerPoint that goes for much longer, and I do it as an interactive session. I just want to go through the first few slides of it to lay out some of the groundwork, and then I'll stop there and we'll get into the Q&A part of things. So the topics that I want to touch on here in terms of succession, you'll see by the agenda that I use, there's a lot of you in these topics. You yourself and the people around you, your family, the network that you have around you. It's very important that rather than focusing on the business succession being about the business alone, it does encompass all the different parts of who is connected to that business. And it does start with you as the person. I know that part of the discussion here will be about starting up a business or pushing a business forward, as opposed to the transfer or the succession of the business. And a lot of the things that will guide a person, a business owner, on what is a useful position to be in to have a successful succession really comes all the way back to the beginning of setting things up with a sufficient amount of structure, so that when you get further on down the road and you're looking to harvest things in one way or another, pass it on down generations, look for some kind of a suitor who's going to take over from you or just wind it down, having the structure in the first place really is helpful to get you to be in really good position to be able to sell that business. So I'm going to take you through these first things, and there's nothing really heavy on these slides here. As I said, I want to just lay out some of the groundwork here, and not have the focus being solely on the business itself, which definitely does have to be the ultimate focus when you're talking about transferring on a business in whatever way, whether it's transfer on down generations, as they say, or if you have some kind of an arm's length person who's reviewing things and looking at buying out. But in terms of being a business owner, those of you who are well-established business owners, I think that you would resonate with this notion that sometimes you are so connected to the business that you don't really distinguish yourself much from the business in terms of how you spend the time in your life. But as you are looking at the succession of that business, part of what you need to be doing is not just what's going to happen with the business and what's going to be the occasion on closing date when the sale happens or the transfer happens, if it happens at one point in time, or maybe there's a little bit more of a staged transfer, but looking beyond that and considering who you are in that future state, looking at how you've spent your life during the time that you've run this business, and looking out how you will be spending your time out there in the future. And this is partly a lifestyle, like having purpose in your life that is going to be important to you now and then. And particularly it might really hit you at that point when you don't have the business, which has been your intellectual and your physical focus. Having to have some kind of a purpose independent of the business is something that is challenging for a lot of people. So that's one part of it, is just what are you going to do in those later years, whether you want to call it retirement or anything else. The other part of this is on the financial side. How tied are you in terms of your finances to the business itself? Have you used the business's resources, sort of crossing over hybrid business and personal type of activity and expenses, and what's that going to mean for you later on when you disconnect those things? And then in terms of selling the business, are you looking at what you want to do in those later years, and therefore how much must you realize on the sale of the business in order to have that life that you have? Or are you looking at it as, I'm going to see what I can get for the sale of my business, and then from that will then dictate or guide how it is that my later lifestyle will be carried out. So those are some of the considerations that come up in terms of you and future you. Before I move on, I just want to mention that one of the handout pieces that'll follow from the session here is a series of questions under these categories that I just showed you up front, that give you some thought, a thinking exercise of who you are, who your professional network is, the family, the key people. So it just takes you a little bit through that so you can think through it for yourself, non-technical, but giving you an opportunity to explore a little bit about where you might be going with all of this. So from there, as I just mentioned, you then have your professional network. And the thing that I want to say about this is really just the subtitle it's on here, expert meet expert. I use this phrase, I overuse this phrase all the time. And particularly I talk about it when I'm talking about estate planning, because I used to run an estate planning law practice, that when you are having a professional engagement, you want to make sure that obviously you get the most out of that professional engagement, whoever that professional might be. And the reason I have this phrase, expert meet expert, is because we look at people who have technical skills, particularly consultancy type of technical skills, all of these people surrounding the you, as being experts in one area, or maybe even more than one area, depending on who that professional is. And we focus outwardly at who that person is as an expert. And we also then, in order to get the most value out of that relationship or each of those relationships, have to look inwardly in order to pull out all of the knowledge that you have available to you with each of those professionals. Then you also have to be forthcoming with the details about yourself, so that the professional that you're dealing with can see the context in which he or she is applying their particular expertise. So that's the expert meet expert. You are an expert in yourself. Each of those are people or individuals or organizations are experts in their particular area, and you need to then meet them more than halfway, meet them and work with them so that your facts, your background, your opinions, all of that is then integrated with the expertise that you're looking to get. And then the last thing I'm going to do here before I turn it back to Mishka is this acronym that I've used for years and years. As I said, I used to teach entrepreneurship, and I don't know if I came up with this acronym myself. I know I didn't the exact acronym I came up with, but this notion, or if it was something which I came across during studies, but I've used it for literally decades. And I do mean that. It's probably now about 3.5 decades that I've used this in one way or another. When you are looking at your business, you have to take a dispassionate look at yourself within the business. So as much as possible, step outside yourself. Go over onto the perimeter and look back at the business and see what it is that you contribute into that business. And is it that you have special leadership, as it's showing here, leadership skills, licenses, knowledge? Do you have those special things? Is that what makes the business more than the components, that the whole is worth more than the individual components because of you. And that's going to be true to some extent in most businesses. But also think in terms of what this is as a commercial opportunity for someone else, because it's likely worth more to you currently than it is to somebody who's coming in, although that's not always the case. I've come across it where the buyer actually valued the business more than the seller did, ironically. But the view that I want to look at is whether this is you as a very outstanding personality, that you run this operation and make a wonderful income and you have passion about it. That's one end of the spectrum. And then in the middle area would be an operation that requires certain of these specific skills and licenses in order to run the business. And then over at the further side is an independently operating business, and it doesn't matter who is operating it because it is kind of this self-perpetuating machine in a lot of ways. So which one of those are you right now, and which one will you be at the point when you sell the business? Because if it's all you, then you may not have a business to sell. And if it's the one in the middle, then the choice of who is going to be your successor is going to be among those who have those skills and those licenses. And if it's over there on the other side in terms of an independently operable business, then it may very well be a much larger universe that you're looking for. And then I come to this acronym here. With a business owner, every business has these 4 personalities. It might be in one person, it might be spread across a number of people, but it's these 4 personalities. And this is part of where you would go in terms of how you develop the business from the early stages until you're ready to transfer the business over. Technician, entrepreneur, administrator, and manager. Appreciating that the last 2 are kind of synonyms of one another. Here's what this means. You have a technical area of expertise. Dan, for example, in kinesiology, that's his technical area of expertise. Apologies, Dan, if I'm narrowing you down too much, but that's the technical area of expertise. Then we also have the part of the personality that takes the initiative, that decides to turn that passion into a business enterprise. And from there, we want to then capture the ability to start a business, and then how do we sustain that business? Well, we bring in someone, either personality or another person, who is an administrator, who can look at what it is this technician entrepreneur has put together and can document it in a way that it is clearly identified what things have to be done in order to run this business. And then the manager is the one who runs the business. So it may very well be, as you're looking further out in time in the succession of your business, that you have some or all of these skills, and you may have to fill in the gaps of others. You may be hiring your own boss in order to get to the point of being able to sell the business. So as I say, I like this acronym, having the different personalities. That written piece that has the questions in it is going to be shared with you afterwards. And I'm going to stop there, Mishka. I know that we've got questions that are in here. So I'm going to close out my screen and I'll turn it over to you.
Doug, thank you so very much. This has been really helpful actually to set the foundation for our conversation that we're having today. So thank you so very much for that. I'm going to actually ask you one question, and I was wondering about this one. And what is the step that businesses have to take in getting ready that is most difficult for them? And that's maybe one that is often overseen, and that you, in your experience, would say if everyone would spend a bit more time here, likely would see a better outcome.
I would say it's along the lines of what I was saying about hiring your own manager, but I guess the part of the way to look at it is stepping outside the business. A lot of times business owners are working the business all the time, and maybe that they have to because they just need to be doing a whole bunch of things, or they just love to and don't want to step outside of it. They want to keep on doing all the stuff and getting the dirt under their fingernails. It is the need to step back and just distinguish yourself from the business so that you can take that cold look at it and really not treat it like it is your child and attach value to it because you love it and you created it, but understand that what it is to you is not necessarily what it's going to be to someone else. And that puts you in a better mindset to have a proper negotiation with someone else. Because if you're stuck on the idea that it's worth X amount dollars wise, or in terms of the way that it's done, and if somebody does it differently or offers me less, then I'm not going to play ball with them. Step outside of it and understand that they're going to do it a little bit differently, and realize that if you continue to treat it as yours and yours alone, it'll always be yours and yours alone, and there won't be anything that you'll be able to transfer over. So try to take yourself out of it so that you can look at it in that cold, dispassionate way.
I think that's excellent, excellent advice. And I think it's a perfect segment, Dan, to get you into the dialogue, because here is looking at it not from a person who is selling it, but a person who's possibly considering to invest in a business or to at least explore the potential of a small business as a part of investment or as part of their own future. What criteria should an individual look at, or a group of people look at, when evaluating the potential of a small business for an investment?
Thank you, Mishka. It's a great question. And Doug, fantastic summary there too. And I agree with you. Sometimes you have to step away. And I often see that a lot with these young entrepreneurs that are in early stages of their business, is that they're so passionate about their idea that they really defend it to every single point. And just because you're the one who started the business doesn't necessarily mean you're the one who is the best person to operate the business too, because you might not have that experience. Sometimes you have to bring somebody with a little bit more experience in to help you reach the goals that you want to reach. So one of the things that we always say here is that when an investor invests in a business, they invest more in the entrepreneur than they actually do within the business too. So one of the things you have to do as an investor, you have to realize, is this person somebody that's going to be able to listen to suggestions? Are they going to be able to pivot their strategy if you suggest something to them? And oftentimes that's the hardest thing, and it's a yes or no for a lot of investors, is that they're not comfortable investing in the entrepreneur because the entrepreneur is perhaps too passionate to become almost hard-headed, and they don't like to accept change. That makes the investment a little bit more difficult for the investor. Another thing to do is, we always have to look at the financial projections, see where they are, look at the company valuation. How much is it worth now? How much can it be worth? Is there an opportunity for you to make a return on your investment? Sometimes, investments, they may take 10 years before they see a return. Sometimes, in some cases we've seen here, it's within 1 or 2 years too. So really understanding that sometimes it is a short game, but most oftentimes it is a long game too. Now, the benefit of investing into a small business is that you may have input within that business. So you may attain a board seat perhaps, and you may be able to, have some input on the direction of the company, the strategy of the company too, which is allows you to be a little bit more involved and to have your say compared to investing in perhaps stocks or larger companies. You may just be as a silent investor and not necessarily have any opportunity to suggest any decisions for the organization too. So I think, some of the things that you need to look at is really just, the business plan, the financial projections, the commercialization plan too, but also take a hard look at, the entrepreneur themselves. They're going to be one that you're going to be able to work with to, succeed together.
It's an excellent point. And then one of the questions that actually had been submitted was also the question, is it better for an individual to go forward on their own investing in a small business or investing in an entrepreneur, or is it better actually maybe from a first-time perspective to have a group of people that are supporting it? Because maybe we have a few people on our call saying, like, my expertise lies in that. I can evaluate a business based on this criteria, but to taking it all on, I might actually look for a partner. Do you have any suggestions when it comes to that?
Absolutely. I'm always from the school that, the more minds together, the more powerful the opportunity is. So you're only an expert in what you know, and to try to be an expert in many different domains is going to be very difficult for you too. So if you feel more comfortable and you think that you can bring other people in that can provide a little bit more expertise, that's going to make your money go a longer way too, and it's going to actually decrease your stress. When you're investing. If you're the sole investor, then a lot of stress falls on you. And I've seen some investors be very successful being sole investors too, but I've also seen teams of investors be even more successful because you have more input, more say, and you can also accumulate more board seats for that organization too, so that you guys as investors have a little bit more decision-making power within that organization.
Makes sense. And this is actually a question, I think Dan and Doug, it goes to likely both of you, because we are being asked this on a regular basis. And there are individuals who are saying, like, how do I find out which best business is ready to go for sale or to be for sale? What are the businesses that are ready to be invested in? And people are often saying, what are my resources, where and how can I find out? Because not all of this is publicly known. There's a lot of transactions that are taking place quietly. It's just because we are and work within that circle, so we might hear about it, but there's a lot of people outside of that circle that might not be aware of it. Maybe if I ask Doug first and then move it over to Dan to saying, like, what are good resources for people to kind of explore, to seeing what businesses might be for sale?
Yeah, I think I'm going to turn it right over to Dan, because I think Dan deals with this more regularly than I do. My kind of consultations tend to be directly with business owners about aspects of their business. But when it comes to this kind of an issue, I'm going to turn it right over to Dan to pick it up.
Perfect.
Absolutely. Thanks for putting the pressure on me, Doug. Really appreciate it. No, I deal with a lot of companies that are looking for investment too. So one of the first things I do is use your local resources. You have the GNCC that deals with a lot of business, and sometimes these businesses will approach organizations such as the GNCC to say, listen, we're ready to sell, we're ready to get investment. Can you help us be introduced to some investors? Also, look at other incubators and accelerators in the region too. You have a fantastic one at the Brock Link, Innovate Niagara, another one, and us here at the Spark Innovation Educational Center, that oftentimes, these are community hubs that are supporting entrepreneurs. So when an entrepreneur is ready to sell or ready for investment, they often seek advice from these organizations. And then our job as an organization, just as Brock Link and Innovate Niagara, is to go out to the community to see if there's any potential investors. There's also things called angel groups too. So angel meetings happen typically on a monthly or quarterly basis, where different companies are looking to seek investment. And oftentimes when it's an angel investment, it's that they're really seeking money to raise and to get to the next level, whether that's a pre-seed or a seed round, or even just a startup round too. So oftentimes you can join these meetings at a low cost or no cost as well too. Oftentimes they even have webinars too. So really it's making a list of the community partners that are focusing on supporting the entrepreneurs, supporting the startups, and supporting the companies around too, like your chambers, your innovation centers, your angel groups too. And by joining these groups, joining the newsletters of these groups, joining the email list of these groups, you'll often get the information that you need and the companies that you need to, or the information on the companies you want to invest in. There's also other online profiles, such as Crunchbase is another online website too, where on Crunchbase, it's a worldwide website where you can see the profile of every single company. You can see how much their last raise was. If they have a raise, you can see their whole team. It's almost like a LinkedIn for just specific startups and companies that are looking to raise in the next round too. So just creating, it's a free website. You can create a profile there and you can just check it on a daily basis. But the biggest thing is relying on your local network to provide those opportunities for you.
Thank you. Then a question, if there's an individual they're interested in investing, they might come to you and ask you and say, like, what is Spark's success record? And looking at the individuals that have invested in it and the long-term success, are there ways that you keep track of it and can provide statistics or KPIs that assist maybe new investors to start exploring it?
Yeah, absolutely. Typically most of your incubators and accelerators, such as ourselves, Brock and Innovate, they'll have these metrics already documented as part of their funding agreement with their funding sources. They have to provide these KPIs too. So we do have those numbers too. One of the things, we're a relatively new hub. We've only been around for 4 years, and typically the investment stage for a company, or the growth stage before they get to the investment, is about 4 to 5 years. So we're starting to see a lot of our companies now that are seeking an investment. But for just for statistics sake, in the last 2 years, our companies have raised over $20 million in funding through working with investors too. So yes, there are documentations. Most of it is public knowledge too. So you can find their year in review reports too. You might not find any specific companies for the specific organization. You might have to email them to get some more information too, because of privacy and different things like that too. But no, that's our job. Our job is to, connect the startups, the companies with the community of investors too. So if you're ever needing any information, just, send an email. Most of the organizations have a pretty easy ability to access us. And then we set up a meeting, and basically we say, okay, these are the companies that are seeking investment. These are the companies that have already had investment. And in regards to success rate, I'm a true believer that, it's only a matter of time before a company becomes successful. It's not, if it's going to happen, it will happen. It's just, it needs, they need, with the proper coaching, with the proper team and the proper resources, then, the chances of success are that much higher too. So I'm a big believer that, it's only a matter of time for some companies to get that investment. And some companies might not even need investment, right? They may just need to alter their sales strategy to increase their revenue, or they may not need investment right now and something later down the road. So that's where we specialize, and is making sure that we have a good plan for investment for a lot of these startups too. So the success rate, like I said, it's difficult to determine, but I know in the case of ourselves, Brock and Innovate, we do everything we possibly can to make sure that they are successful. And we're happy to say that, a lot of our companies are reaching that success now. We're very close to reaching that successful level.
Thank you very much. And Doug, I'm coming back to you because there's quite a few questions actually directed your way. You had started out by talking about the key elements that owners need to consider when getting ready and or when looking at succession planning. But one of the questions, and I think it's a really valuable one, is how far in advance should a small business or business start the succession planning process? Possibly some people are saying from the time you start and register your business, but I'm passing this over to you.
Yeah, and then that's the easy answer, and then you stop talking. It's like, there you are, back to you. As soon as you open the business, then you have to think about the succession, which there is some truth to that you want to be thinking about it as something of your thought process at all times. The thing you don't want to be doing, and this is more so what tends to happen with my interaction. So I'm the tax and estate support person for Meridian Credit Union and the credit unions across the country. I will hear from advisors when a business owner shows up and they want to retire next year or 6 months from now, and haven't really put much in place, but they've had a really successful business. And so, well, why can't I do that? And the problem with that, of course, is that you haven't lined things up to get the most, optimal value for yourself by having something that is truly saleable. I don't know if there's an easy way to say, in terms of evaluating the financials or the other metrics that you might have for the business operations. I don't think that there's an easy way to express that and say, oh, well, look at this, and that'll tell you when. I tend to look at it on the basis of a 5-year lookout in time. That the one of the main professionals that you're going to have interaction with will be your accountant or your tax preparer, who is going to be on an annual basis assisting you. If you've got an established business, maybe you just love doing it and you're going to be filing your own taxes, but I suspect that you're working with an accountant. And so you're going to have that annual review of the statements as part of what's going on with the business, in addition to filing your taxes. So I would say that at a given annual review, always have this thought of, if I look 5 years out in time from right now, do I think I will be seriously in the midst of succession? And that might mean that you're seriously in the midst of it, that it might still take a few years beyond that point. But always have that question to yourself, and perhaps openly with your accountant in that conversation, to say, what does it look like 5 years out in time? It's a round number, that's one thing. And it might be too long for a lot of people to have to think that far out, depending on how established your business is, or how you tend to do your planning. But it gives you something that you can work with. And then once you've gotten to the point where you have that meeting and you say, my gosh, I'm actually thinking that I may no longer be doing this thing that I've been doing for the last decade or two. Out there, a half a decade from now, I need to start lining up resources, evaluating my business, not as an ongoing year-to-year exercise, but something that is going to be prepared for someone else to take over, or maybe more than one of those someone else's. So that's my simple answer, if it can be simple, is 5 years out in time as the thought process. But that's really where you start working at it in earnest about what you need to line up in order for it to happen at the appropriate time, once you decided that you will be in that process 5 years out in time.
Yeah, I think it's an excellent, actually, milestone to consider and to remember and to ask ourselves those questions. It actually makes, it's very sensible. On that note, we are often being asked to saying that based on the last couple of years that the world and what we as the world have gone through, are more businesses right now looking at succession planning or at the succession process to a higher degree than what we have seen previously?
I don't know the answer to that, but I suspect that a lot of businesses now have, and obviously we've been through this very, very difficult episode that we're not fully out of yet through COVID, but I suspect that a lot of businesses have seen a different world that's ahead, that their business either did or did not adapt well to over the last few years, and it's a little bit of a check-in for businesses to say, it may not be that we'll have another pandemic shortly down the road, but there are things that are outside of our or my control that might dictate changes that I may not have chosen for myself. And that's why, not to say that you have to have your business ready to be sold from day one, but that's why having systems in place, having operations manuals, proper job descriptions for all the people who are involved, having those in place are really important, because you just don't know what's going to happen where you lose your key person in your manufacturing or in your sales part of the operation, and you never thought they would be gone, but they're gone, and now you have to figure out whether this business is sustainable without that person, or is at least going to remain sufficiently intact in the way that it was before, just as a business, let alone transferring it on. So this kind of an event that we've been going through is an opportunity for people to think about the things that are beyond their control. I think that a lot of entrepreneurs who really are good at what they do think that they can manage the world unto themselves, but there are a lot of things that are just beyond our control, and so it is important to keep that in mind, and what we might be looking at out there in the future that we don't know what it is. We don't know what the next thing is, but having some good structure in place will allow us to manage with it a little bit better than being unorganized.
Absolutely. Yeah. And just to that point, if I can add some other things too, I agree that the 5-year lookout is probably your best, but I think it really, right off the start, you should be really harnessing your employees' talents and make sure that you're creating professional development opportunities for them. Because, I want to think, take the positive of a succession plan. We like to think of sometimes that the hit by the bus theory. What happens if tomorrow you get COVID and unfortunately you pass away, or you're really sick, or you get diagnosed with a deteriorating ailment too? You got to be able to feel comfortable that your business will continue on, your legacy will continue on afterwards too. So oftentimes what I like to do with a lot of the businesses I work with, or myself too, is like to bring the managers working underneath me to a lot of my meetings too, so they can understand how the business operates. A lot of shadowing right off the bat too. Often provide them a lot of professional development opportunities and leadership, management, teamwork, and things like that too, so that if for whatever, God forbid, anything ever happens to me or any of the CEOs for the companies that we work with, the rest of the team can carry on and not necessarily have to sell the business in a panic, or have to bankrupt the business because they don't have that leader that they wanted to too. So I think with succession planning, you should always just be aware, like great points on Doug, documenting processes and things like that too. Even journaling yourself too, having a vault of information that if anything ever happens, that vault can be shared with anybody in the organization and they can, carry forward. And then really relying on your team to really be more dynamic and to take on part roles essentially, so that they do their main role, but they also have their foot into a couple other roles too. So just in case you lose somebody moves to another job that company's really relying on somebody could step in for the interim, and until you can find that replacement too. So right off the bat, I would start thinking about some of those things.
Yeah. And I think we have always encouraged a lot of businesses to organizations to also have a succession plan and a policy in place. So what happens then? And I think if that policy is in place and that plan is in place, I think we're much better prepared. One of our, I'm switching a little bit here on topics, but one of our attendees today, Mark, is asking, the US government has an SBA program for individuals to buy a small business. Does Canada offer anything like this that would assist individuals to buy a small business? And
I don't know of the specific. I'm going to throw over to Dan in case he doesn't know about these things. Deals with it regularly, but I do remember Science Technology Canada, as it was named at the time. That's actually a part of the government which I worked with years and years ago. I used to run conferences and work with Science and Technology Canada, and they definitely had lots of resources that were available at that time. Of course, the government's been long reorganized over the last couple of decades, but I don't know what the specific part of the organization or part of the government may be, but there are lots of resources that are available. And to be honest, and not to whine too much about it, but I found that the recent consolidation, a lot of the government websites, where they existed kind of in silos unto themselves before, now they've been pulled up together. The challenge I find with that is that sometimes you know that you're only looking for things under health, let's say, and when you do a search on the main website, it takes you into a lot of other places that you're not really looking for. So I don't know exactly where those are, honestly, but there are lots of resources. They've been reorganized and they are consolidated in the government's website. I'll turn it over to Dan though on some specifics, perhaps.
Yes, absolutely. Yeah, when it comes to SBA loans, if that's what you're referring to there, I mean, there's Canada versions of that too. One of the programs that I often tell a lot of my entrepreneurs to go through is a thing called Futurepreneur. It's a $20,000 loan, first year interest free, and then you start paying interest in the second year too. So and it's pretty easy to get accepted for that as long as you have a business plan and a financial projection. But you can also look at your local credit union. They have a quick start program as well too, which is for any business under 2 years. I just learned about this too, but Meridian Credit Union has a quick start program that allows you to have a $25,000 loan plus a $10,000 line of credit to really seek any of those opportunities for funding too. Oftentimes, a lot of the local municipalities have little programs, Start a Company Plus, Summer Company Plus programs where they do offer grants for starting a business too. But in regards to, finding money from the government, there are programs available. BDC has a couple of programs too, but you just have to make sure that you're ready for that too. So some things you need to have is you always need to have a business plan, and then reach out to your local incubators and accelerators, as well as your Small Business Enterprise Center of St. Catharines and Niagara Falls to help you establish that as well too. Have your financial projections. So relying on some of your small business advisors from your local credit unions or banks to help you with your financial projections too. So you're never going to get a loan just with an idea. You always need to have supporting documentation with it. And in fact, at our hub, we have a program called the Investment Readiness Program. It's a free program to attend. It's a 16-week program, 8 week of courses and 8 week of coaching sessions. But basically, the whole purpose of the program is that when you graduate the program, you have all the necessary documentation to receive any type of loan, any type of investment too. And most businesses, like I said, are investable. Sorry, Mark. It's to buy an existing any loans to buy an existing business, not starting one too. So I don't necessarily, like I said, I'm the same with Doug over there too. I don't know any programs to buy existing businesses too. But what I can do is I can certainly look into that for you, Mark, if you want to reach out to me, and then we can have a conversation. And what I'll do is I'll talk to some of the colleagues I know, some of the partners that we have for those opportunities.
Excellent. Thank you very much, Dan. And to that question too, on our website, we have a number of different resources that people can access to for exactly that. And we'll make sure to include them in the follow-up to all participants too, because it will give everyone a little bit more details on exactly the question. So great question. There is, and I think, Doug, this question is likely more directed your way. How can a small businesses, actually, it kind of touches maybe on both of you to some degree. How can a small businesses balance the needs and expectations of family members who are involved in the business with those who are not? And especially when it comes to succession planning and selling it, I think it's a key question. So, Doug, over to you.
Yeah, I think that is one of those, like I mentioned, taking a cold hard look at yourself, but also taking a cold hard look at your kids. You love your kids, but you may not be doing them any favors by transferring over a business that they are going to drive into the ground. That's going to hurt them. That's going to hurt the relationships, going to hurt all the other people who are surrounding if they don't have the skills that are necessary to do that. So that's number one, just if it's just one child, if you're looking at do that, but also where you've got multiple children and you may have some who clearly have the capabilities and the interest of taking over the business and others who do not. I think you want to manage those expectations from an early stage. It just depends on your personality, your family culture, how you go about doing that sharing of your beliefs about being in business, being an income earner, and the role that each of the people have. You want to make sure you establish that early on, so that nobody gets surprised later on. The problem that you can run into is that there is a high expectation with some children, adult children, that they are going to get the business simply because they are the children. Even if they don't have the skills that are necessary there, they look at it as that's their inheritance. It's like generally with inheritances, my parents are going to turn over whatever they've got to me. I don't have to go out there and work in the same way. Not to say that the person is lazy, but their expectation is that's going to be the route that's going to happen. The example that I use, and I've had this conversation a number of times, is with farming, where you quite often have asset-rich, cash-poor type of estates. Estates, I say in a more high-level sense, not that somebody's actually died at that point, but asset-rich and cash-poor. And if you've got, let's just say that you got two children, one of whom is ready and available to take over the $10 million farming operation, and the other one who's not. Well, you don't have an extra other $10 million if you want to, quote, equalize the estates that you're going to transfer over to your kids. And when you transfer over this $10 million operation to the one that is capable, you're not giving them $10 million. You're giving them the responsibility to get up early in the morning, to go to all the necessary meetings, to be doing all the purchasing, all the things that are involved with running the business. And that applies to any business. I don't know how early in the morning you have to get up with some businesses, but that's the one that always comes to me as having that obligation directly thrust upon someone. And so I think you have to make sure that there's an understanding of the nature of running a business, and hopefully they've been involved to some extent already, and so they do understand that. But if you have one or more that really are not appropriate to be running the business, then you have to stand back and say, okay, how do I manage this emotionally and practically? How do I explain to this child over the course of a number of months or years how they're going to be a wonderful employee working for the business, which is going to be run by others that are more capable of running the business? And then you come back from that in terms of the running of things. Then you get to the ownership of things, and you say, okay, well then that person might say, that's fine, as long as I get my 50% ownership, I'm happy to do the Joe jobs as I get my ownership interest because I own it. Well, if the value of the business is being driven by one of those people, to have the other one piggybacking along with that might be a recipe for interpersonal disaster among them, as well as with you if you're still around while that's happening. So a lot of those things need to be considered at an early stage, and then managed for a number of years until the event or the series of events happens of the transfer of the ownership eventually down there in time.
Doug, on the note of one of the things that you had mentioned in your opening comments, and there's a question that came forward on it, is that when we look across Canada's landscape of businesses, we have a high number of solopreneurs, individuals that own it. And there's often the question, what are you actually selling? If it's professional services that you offer and others, it's really you. It's as an individual, and people work on it for a long period of time, and maybe they're now looking at it and saying, in 5 years, maybe I am going to consider retiring. How do they need to set up their business so that they have value beyond their own brand, their own individual personal brand, to have something to sell?
Yeah, I think that when I gave you that spectrum of it's your personality, it's your occupation, it's your truly independent business. That's it's your personality is that solopreneur type of thing, and I think that as an individual, each individual, you have to look at that and say, is it truly me? Is it that I'm just the the very capable person in this particular field of expertise, and I just can't find someone who is me. I don't think I've ever seen the guy, but I used to use the example of not everybody can be Shecky Green. I don't know who the heck, I know who he is, but I don't think I've ever watched anything other than maybe on the old Johnny Carson Tonight Show of Shecky Green talking in any way. But he's a distinctive personality, and nobody really is that person. If you're that in a positive way, if you're that kind of very capable person, you might very well look at it to say, I'm not going to be able to sell this thing in the way that others can sell their widget making operations. And so I need to make peace with that, perhaps in part, that I don't have something saleable. Or if I really do want to move along that spectrum over to having that independent business that can be sold, then again, I have to look at it. Do I hire my own boss? Do I hire consultants to help me frame up who it is I am within this solopreneur business and see whether I may be able to extract myself with it and leave value behind for someone who wants to take over for me. It's a hard thing for a lot of those people who have big personalities and big capabilities to come to the realization that because they are so good at what they do, they don't have anything to sell in a lot of cases.
Yeah, makes excellent sense. Can I also, Dan, just to get to all the questions that we have to here today, how can investors navigate the regulatory and legal landscape when investing into small business? And what compliance considerations should they keep in mind? And so one of the questions I'm often being asked by individuals that are planning to invest is that, do I need a lawyer? Do I need an accountant? I always say those two make a lot of sense to have by your side. But can you give some insight to this particular topic?
Yes, just two things. I just posted I'm going to post a link on the chat for markets from BDC. They do offer purchasing loans and financing for business purchasing too. And just a couple of points on Carroll quickly. Sorry, on Doug, his point about family too. Oftentimes what I see is creating boards and making all decisions, major decisions pass through the board so that your family members can still be involved in the business, but the major decisions are being run by the board. And as long as you have a board that's, employees and family members, then it can help to alleviate a lot of those stresses as well too. And with the solopreneurship, oftentimes mergers are the way to go. If you're looking to sell, you can merge the companies together, sell off a lot of your business too, and still can be involved in the board capacity as well too. Now, when it comes to the investors and the legal thing, yeah, absolutely. You should always try to have some sort of legal backing when you're investing. If it's a friends and family round, if you're just helping your friends and family out, then that's not necessarily the case, because it does, it costs anywhere from $2,000 to $5,000 in legal fees to sometimes finalize those raises. I just did a raise for my medical device company, and that was the same thing too, costing about $5,000 in legal fees for that too. But it made me feel a lot more comfortable that there was legal backing to it. And for an investor, there should be something regarding that. Now, you can always do a safe note that, essentially you're investing now that can be converted to equity later too. But again, what happens is that there's no legal backing if that company does go under, whatever the case is, then oftentimes, you don't recoup that money, and that's kind of a loss too. So you should always try to have some legal backing too. There's some great firms that work with you. There's also a lot of online platforms that can create templates for you. And then basically you fill in the template and then you just bring it to a lawyer to sign off, which decreases the cost associated with that as well too. But anytime you're dealing with, a small company, it's a risk, but it's also high reward too. And that's one thing that I want to, tell people too, is that, people, like you said, people invest in stocks and bonds and all that stuff too. And it's really a hands-off approach. But if you really want to be involved in your investments and you want to have an opportunity to have a say, then, investing in startups is what's going to create, more impact for you and for the community around you. You realize that when you invest in small businesses, you're supporting the economy of that local community too. So there's a feeling, that you're making a difference, where if you're investing in an Apple stock, if you can buy them at now, at whatever price they are, but how much of an impact is your investment making? Is it just to make a return on your investment, or is it to actually have an impact in the community? And that's oftentimes what I try to tell people: when you're investing with startups, especially on a local level, the impact is tremendous. You're providing, you're providing jobs, you're providing, a future for your children to have a high paying job in the community too. So yeah, you should always have some sort of legal backing if you can. But there's ways to decrease the cost. And again, there's a lot of online templates that we use oftentimes, and these need to be reviewed and signed off by a lawyer.
Yeah, and on that note, we often look at it and saying that a small business, or especially a startup, is the one that actually needs capital to help them out. But at the same time, we probably have a lot of investors that are on this call or they're in our community that actually could add significant value to small business beyond providing capital. Can you speak to that? And maybe what are some of the things that investors should look at?
Absolutely. So, there's always, equity is the main form of investment, but there's also a thing called sweat equity too. And, what sweat equity means is that, I'll invest a little bit of cash, but I'm also going to invest my time and work for the business too. And again, most of the times investors are ones that have done it before. They have grown a business, they are an entrepreneur, they've been successful in growing a business, and they perhaps sold off some shares, sold that company too. So, their expertise and their values like gold. So oftentimes that sweat equity is worth a lot more than that cash too. So oftentimes, like I said, I have some investors in my company that are, 5% cash investment, but also 5% sweat equity too, and they hold a position, a C-level position on my team and on my board too. Now, what that it allows the investor to feel a little bit more comfortable in their investment too, because now they're almost, they're passionate about it too, because it's almost like they're representing the company. And, that's far more important for an investor than just giving cash and kind of being hands off. So absolutely, as an investor, some of the ways to mitigate the risk is to have a board position, is to have perhaps a role within the organization, is to be involved within the organization, be passionate about it, and then your money stretches a lot longer away.
Doug, a couple of times you had mentioned the personal attachment that people have to their organization, to their business, how difficult it is, how difficult it can be for family members that are involved in it too, and especially how difficult it can be to think about succession planning and to passing it on. But what are some of the best practices for those owners to evaluate and select an external candidate for succession planning? Because I'm thinking that if I look at it through the lens and glasses of this is my baby, mine, I have, given all my time and effort to, or it's my piece of land that has been in my family for 4 generations, and I'm now passing it on. What are things that they need to look for in an external candidate so that we don't look at it solely or dominantly through those lenses?
I'm going to turn that around a little bit, because it's going to depend on the particulars of the business and the personalities that are involved. And the way I'm going to turn it around is I want to take it back to the time that's involved, how far in advance you have to be thinking about the succession. If you care about who takes over your business, because sometimes some people just want to sell it and take the cash, and they have no community connection by the nature of the business, and it really doesn't matter to them who takes over. But for a lot of businesses, you are connected to the community, and you have family members or extended friends who you have worked with or delivered services to. And so making sure that whoever it is that is your successor carries out with the same kind of integrity as you have taken to running the business, that's really important to a lot of business owners. And so not only does that mean how much time in advance you have to be prepared to review who it is who's going to be your successor, but you also, as I was saying about not being involved in the business as often as you are outside of it and looking at it, you also have to be aware that the due diligence process, not necessarily the formal due diligence in the immediate time preceding the closing where the lawyers and the accountants are involved, but the generic due diligence process of evaluating who might be appropriate, that takes you away from the business. Being involved in the kinds of organizations that are connected to your business, perhaps there are supplier conferences or customer conferences that you spend time at, and you look at it strictly in terms of a transactional way of spending your time. Well, think of it in terms of evaluating who are the people around that who may be the appropriate suitors for you with that, which may mean that this is years and years that you're going to develop relationships just because that's what you want to do, is have good relationships. But also it might turn the corner where you say, hey, I've been spending a lot of time with X person. That's the kind of personality I want to take over from me. I'd like to bring that up, and then you'll be able to then carry on that discussion. So apologies for not answering directly. You see, I bypass what you're asking about specifically, but I think that it really does come to the time that's necessary ahead of time, and to devote towards that, and not be spending time at your business, and being aware that sometimes you're going to have to let go of the business in order to determine who might be the appropriate suitor to take over the business from you.
That makes sense. I'm conscious of the time, so we have about a minute left, which gives each one of you about 30 seconds for closing comments. Doug, as we started out with you, if I pass it on to you and then to Dan for some closing comments, you would appreciate that. Doug?
Okay, I think I burned up a lot of that. Apologies for just that comment. But here, I'll give you this one thing. We didn't talk much about this in terms of the tax aspect of things. In owning a business, you want to be able to sell it and have the best tax treatment for yourself, as in the most cash that comes out of it. Sometimes business owners personally own the business, and they don't necessarily involve spouse or children in that. And so at an early stage, if you can get them as part of ownership and do it in an informed way with legal and tax advice, then you can share out the value in a way that reduces down the total cost of the taxes when the ultimate transaction occurs. So make sure you have that conversation with lawyer and accountant ahead of time.
Excellent tip, actually. Thank you so very much. And Dan?
Yeah, I think the biggest thing, and Doug alluded to this a couple of times, is, it's good to be passionate, but it's not good when that passion, makes all the decision making. You're being stubborn, taking on new opportunities, new conversations, and trusting your employees or family members to be your successors too. So it's really, finding that fine balance between being passionate, but also reasonable, and being accepting of change or difference of opinion too, because oftentimes, founders or entrepreneurs are so set in their ways that they block out anybody else that have their blinders on, and that could be detrimental to the company too. So being open-minded, being open to change and open to suggestions goes a long way.
Excellent. Doug, and thank you so very much for being with us. This has been a really great conversation, actually one that I could easily continue for another half hour or longer. For all of our participants, thank you so very much for being with us. Today's webinar, as always, has been recorded and will be available on our website, as well as being emailed to you, along with some of the resources that have been mentioned. My personal thanks to Meridian Credit Union for powering today's conversation. And for those of you who are interested actually in hearing from Nick Pender, who's the Vice President of Niagara Operations at the Ontario Power Generation, to learn more about the company's vision on electrifying life and what is coming up, their sustainable future, cleaner environments, stronger economy, more reliable communities, please join us on June the 7th, and we can forward all the details about this one to you as well. So thank you very much for being with us, and have a great day.
Thank you so much. I put my email in the chat if anybody ever wants to reach out to me or come by the hub to check it out, so please do.
Okay, thank you very much, then. And Doug, thank you.